5 traders in history. Hey everyone, today's video is dedicated to people whose names have been revered for decades on Wall Street and in closed offices, where the general public doesn't get in. These are 5 traders often called the kings of Wall Street. These are people who didn't guess the market, but rather beat it. They are all different. Some come from a background of mathematics or economics, while others started from scratch, without connections or capital. Each of them had their own path, philosophy, mistakes, and moments when they were on the brink. But ultimately, they forever etched their names in the history of trading. It's important to mention because trading, as always, tell you is the ability to work with probabilities, risk, and most importantly, with yourself. Before we go any further, I'd like to say a few words about my Telegram channel, where we host daily trading sessions, deal reviews, and market discussions. We don't just look at charts, we're learning to think like long-term traders, essentially trying to follow step by step the same path as the people we'll be talking about today. Plus, every week we have a giveaway for a 100% bonus of your deposit. If you'd like to participate, just comment, "I want to join the giveaway," and I'll send you a personal link. Now, back to the story. The first person who can't be ignored when discussing the kings of Wall Street is James Harris Simmons. He's an example of someone who came to trading not as a classic financier, but as a mathematician to the core. He was a man whom formulas and statistics were his native language long before the market. He studied science and at some point realized that the market is the same set of patterns, just hidden deeper. James didn't try to predict news or listen to crowd emotions, but looked for repeating patterns in huge data sets. This is how his fund was born, which later became one of the most profitable in history. There were no classic traders working there, mathematicians, physicists, people who thought in numbers, and the results this approach produced became almost legendary. Yet Simmons never pretended to be a guru. For him, the market was a problem that could be solved with the right tools and patience. Incidentally, the story of our next hero closely echoes Simon's path, but he has his own character and logic. John Overdeck, who together with a partner created one of the most famous quantitative funds in the world, didn't believe in intuition in the classic sense. For him, the market is a set of data that needs to be processed correctly. The foundation he founded relied on algorithm models and rigorous hypothesis testing. No romanticism or the beloved "I think so" approach, just numbers, facts, and probability. This approach requires tremendous patience because results aren't always immediately visible. Overdeck also always emphasized the importance of teamwork. In his world, trading isn't a solitary game in front of a monitor, but a team of people testing ideas, debating, testing, and discarding all unnecessary ideas. Ray Dalio has taken a completely different path. He's a man who relies only on numbers, but also on an understanding of how the world works as a whole, economics, cycles, cause and effect. For him, the market has always been a reflection of real life, which he began very modestly, made mistakes, lost money, but always learned from. Gradually, he developed his own system of principles, not only for trading, but also for life, and these principles later become a foundation of his company, which eventually grew into one of the largest funds in the world. Dalio always emphasized that trading is a game of probabilities, and your job isn't to guess, but to be prepared for any outcome. He didn't hide his failures and openly said that it was his mistakes that made him stronger. There's another man without whom it's hard to imagine the modern market, Ken Griffin. He began trading as a student, gradually building a structure that eventually evolved into one of the most powerful financial machines in the world. His business isn't just about trades. It's about market infrastructure, liquidity, technology, speed, and an example of how trading ceases to be just trading and becomes a system that influences the market as a whole. Griffith has always emphasized risk management and technological advantage. For him, the market is an environment in which the best prepared wins. Watching these people from outside, it might seem as if they are somehow untouchable, as if they live in a different world. But in reality, almost all of them had a moment when they simply couldn't understand why the market was behaving the way it was. And this is a good time to mention the last hero of our story. He's an example of how, in trading, silence, not loudness, wins. Michael Platt is a man rarely mentioned on the mainstream media, but well known within the industry. He is one of the founders of Bluecrest Capital Management, a fund long considered one of the most successful in the world. Platt began as a classic macro trader. His approach was built on an understanding of global process, interest rates, central bank policy, economic cycles. All of these were tools of the trade. At one point, Bluecrest Capital Management managed tens of billions of dollars, yet Pratt remained a man who didn't seek publicity. He didn't cultivate a cult of personality around him, and his philosophy was simple. If a strategy works, let it work. At one point, he completely abandoned managing outside money and focused on his own capital. And this, incidentally, is a very telling moment, because when someone with such access and opportunities says, "I'm more comfortable working for myself and by my own rules," it literally screams about their approach to risk and responsibility. In fact, all these people are completely different, even if their stories overlap. One is a mathematician, another is a philosopher, and a third financial system builder, and fourth a macro strategist, and fifth an algorithmic architect. They have different personalities, styles, and life paths, but they all share one thing in common. None of them came to the market looking for a quick buck or counting on luck, but built a system and paid for their mistakes with time, money, and nerves. These stories are not meant to show what the market offers, but rather demonstrate what a person is willing to take if they do things right. All of these people sought an advantage and then leveraged it with discipline and scale. This doesn't mean you need to rush headlong and follow someone else's path, but rather find your own strategy. Of course, it won't be as an easy or quick path, but it's the only way you'll achieve consistent results. All of these men today, called the Kings of Wall Street, didn't achieve their results overnight. Each of them spent years building a system, and none of them experienced chaos. Even during moments of failure, they maintained logic and a plan. If you're trading now and you're having failures, that doesn't mean you're not cut out for it. It just means you're going through the same journey everyone else has. The only question is whether you'll learn from it or repeat the same mistakes. All of the kings of Wall Street were once ordinary people who simply didn't give up after their first few failures and rush off and find easy money. To sum it all up, trading isn't about genius, but rather about thinking in a discipline and the ability to handle probabilities. The story of these 5 people show that you can beat the market if you take it seriously and systematically. And if you want to go beyond just watching videos like these and learn to trade consciously, understand the market and analyze trades in real time, I have a Telegram channel where I host daily trading sessions, analysis, and discussions of market situations. We learn to think, not guess. The link to the channel, as always, is down below.